Hello students, welcome to this new lecture. Now we have come up from the pastel analysis and we have analyzed all the factors, the socio-economic, political and legal factors which were affecting my enterprise, and now we will be moving further in this series of lecture on microfinance on what is the legal framework for a microfinance institution. So now we will be shifting from micro enterprises, or I should say from the micro institutions to the microfinance institution. Micro institutions are those institutions who are availing the microfinance, and now we will be covering the micro finance institutions and their legal framework. Come and first understand the difference. It is not the same thing. The first one was about the micro enterprises who were using the microfinance. Now the microfinance companies who are providing funds to those micro enterprises, and in this lecture we will be covering what is the regulatory framework for MFI. MFI here stands for microfinance institution. Then what is the aim of supportive regulatory framework? Why do we need this framework? Third, our institution that is known as MFIN. About MFIN, let's keep it a surprise for you and I will be discussing it in the class. It is actually microfinance institution network, which is much talk about nowadays and which is doing a lot of work into it. Then comes your RBI regulation. We all know what is RBI. RBI is the Reserve Bank of India. And then the different government schemes. Basically I have covered two schemes here. The first one is the PMYY and the Mudra Yojana, right. These two schemes are of importance to you for the reason they are the recent schemes and the student must be aware of it firstly. Secondly, the student must also be knowing how the government is working hard for microfinance institution, and what is the need of such type of schemes to our country, as at the current point of time we are facing a lot of issues in setting our enterprises and just sustaining them in this environment. Fine. So now I will be starting up with the regulatory framework for MFI. What is our regulatory framework? I have also talked about in the last lecture when it was in the context of micro enterprises, but now I will be proceeding further with for MFIs. In any country, the regulatory framework has a great impact on our microfinance. Why is it so? From the very first day when I was talking about microfinance, we were saying that we are providing people who are not economically developed. We want people who are we want people to be economically developed. We want to change the life of a particular social sector or social upliftment or employment. So when I say that regulatory framework, why do we need a regulatory framework? When there is an economic development involved and lot of finances are involved, and you have to provide finances or to the people who don't have collateral, it is very important we should have a very strong regulatory framework. Otherwise, the situation will be that we will be in a problem for sustaining our microfinance institution. Right now also when we look back how the banks have suffered because of the NPAs, and when they have the collaterals against their loan. But now if I talk about the microfinance institution, they don't have even the collaterals. So how will they survive? That is why we need a legal regulatory framework. Fine. And these legal organizations, what do they, why are they meant? They also give them what? They also give them certain exemptions. They give them interest rate caps. They give them capitalization and also determine their legal framework. Okay, what are the requirements for the registration? What will be the interest rate? How much should be the capitalization? What will be the exemptions which will be available to you? All these things are a part of the regulatory framework for the microfinance institution. See students, one thing that is very important is whenever we are setting any microfinance institution, we have to keep in mind that there is a capitalization You all are finance students. You must understand that the capitalization is a very important part for any microfinance or any financial institution. And until and unless you have a sound regulatory framework, all these things cannot be done in an effective manner. And that is the reason we are talking about this framework. Fine. What does this framework actually means? This framework first means is the rules. Rules for what? Rules for microfinance institution. What are the compliances they have to follow? What will be the services they would be giving? What will be the process of supervision? How will be they sanctioning the loans? Fine. How will be taking the deposit? How will what should be the regulation system? How prudential they are when they are deciding their policies? All these things are important. Why? All these things are important for the reason that we want that microfinance institution should sustain in the long term. Until and unless these microfinance institutions are not safe, are not having proper funds with them, are not having proper capitalization with them, in the years of their existence they will be diminished. So in the initial years it is very important. They need to be monitored. They need to be working under a framework, that is the legal framework. Why do we need this regulatory framework? The first thing, that we want to provide them services on sustainable basis under uniform, common, shared performance standard. We cannot have different performance standard for different institutions. It would be difficult for them to survive. If we have different standards for different type of institution, it would be difficult for us to keep a check on these type of institution, and naturally we will not be able to manage effectively and get a proper framework for microfinance in India. So we need uniform policies, uniform regulations for all the institutions, so that their performance can be checked. They can be run in the long term. Fine. Secondly, we have to encourage the regulatory authority also, that yes, you develop with new rules, you develop prudential regulations, so that our country, our financial institutions can be benefited. And you should also make rules and regulations where the risk for these institutions is reduced, and certain tailor-made. What does the tailor-made word means? That we need certain specific rules and regulations for the microfinance institution, because since the day when we have started our lecture, we are talking about how microfinance institutions are different from normal financing institution. Normal finances, they are different, and when these institutions are different, they need to have tailor-made certain policies and the profiles, and so that they can operate efficiently and optimally utilize their resources. Fine. And there are two main bodies of microfinance institution regulation, and one body which is much talked about nowadays is MFIN. This also works under our RBI, but this institution is nowadays becoming popular because it is working a lot for these type of institutions. The second is our much talk about a Central Bank of India, which is the RBI, and we all know about it since in all the finance subjects we are studying about it. Fine. MFIN, it is a association of microfinance institution of the country. Okay? There are a number of microfinance institution in our country, and this is an association which is being formed by the microfinance institution, where their primary objective is what? Their primary objective is that we should have a robust development of these institutions. How do we have this robust development? First thing, we should have a responsible lending. What is this responsible lending means? Lending doesn't mean, when we talk microfinance, we say, oh, we have to lend money to the people who are economically backward, for the upliftment of the people who are really needing our capital, who are really needing the funds, who are the people who needs employment, fine. Or we are giving for the, we are giving for activities which are what we have given the term to those activities. What were their activities? Income generating activities. When we say all these things, one thing we all skip is this responsible lending. Until and unless we have this practice of responsible lending, we will not be able to survive when there are no legal framework. Fine. So these institutions have taken an objective as, yes, we will go for responsible lending. Second, client protection. Client protection means my client should know all the rules and regulation. There should not be any fraud in his or her case, because from the first lecture we are talking here, the clients are lesser educated. When the people are lesser educated, there are more chances of the fraudulent activities. So the client protection is again an important part here it is. And what does good governance means? Good governance means that I have my framework is like that all my policies, procedures and all my regulatory framework is well structured, well governed. Fine. That is termed as a good governance. And last but not the least, that is in a supportive regulatory environment. What this supportive regulatory regulations are? You all have when to people like you, the teenagers or the young generation, when we talk of regulations, you people think, oh, something is binding up. No, it is not that. It is not that binding up. Fine. Regulations, what does regulation means is, regulation means that we are providing you a supportive environment. Fine. We are providing you with a supportive environment where you will be knowing all the rules, all the policies on which you have to work, and after knowing all those policies, it would be easier for you to work in a particular environment. Fine. And what does this MFIN do is, it works with whom? It works with the regulators and the stakeholders. Who are the stakeholders here? The stakeholders are the microfinance institution. The stakeholder here are the micro enterprises. The MFIN works with both of them, both these stakeholders, and always keep a dialogue between them. Fine. Always keep a dialogue between them, how they should be included, in our economy, and make their financial inclusion. Fine. Through microfinance. See, major problem in India is financial inclusion. Many economic activities are not a part of regular economy. Fine. So this MFIN is working that how should we take this microfinance institution to the mainstream finance. Fine. It is a representative body of the MFIs. Fine. It is not regulatory, it is a primary representative body, and this is also regulated by whom? This is also regulated by our RBI. Clear? So this is a body which is working with the objective of responsible lending, with the objective of client protection, with an objective of a good governance, with an objective of supportive regulatory environment to the micro enterprises, so that they could be able to be a part of this financial inclusion through microfinancing, and it acts as a representative body which is regulated by the Reserve Bank of India. Fine. So we will be moving forward now to the RBI. Then now we have said, oh, everything is regulated by MFIs are regulated by RBI. MFIN, which is an association of the microfinance institution, is also regulated by RBI. Now it is very theoretical but very important aspect, that is what are the regulations of RBI for the MFIs. First, MFIs are required not to have 85% of the net asset in the nature of qualifying asset. There are some list of qualifying asset, and the net asset of MFI should have 85% asset which are the qualifying assets, and they should be satisfying the following criteria which are given. The first criteria, which is that the net owned fund should be of 5 crore. Fine. Net owned fund should be of 5 crore. For the northeast region, I have said in the environment also that according to the environment our legal framework changes, and here it is visible. In case of northeast region, it is rupees 2 crore. Fine. So, when we were discussing in the last lecture, what we have said, okay, we have a that according to the region, according to the state, our laws are changing, and here it is very much visible. Second, 85% of the total assets of MFI are in the nature of qualifying assets. What does this qualifying asset means? Loan which satisfied the following criteria. Acha, now the question is, what are the assets of a bank? What are the assets of a microfinance institution? So, the asset for in microfinance institution are the loans which the microfinance institution provides. Fine. What are these loans? What will be the criteria? 85% of the asset should be in the form of loans. Means if 100 is the net asset, 100 crore is the net asset, 85 crore should be the qualifying asset. What are the qualifying assets? Qualifying assets are the loans which are provided by microfinance institution. And what are the condition for this loan? First is, the loan should be extended to a borrower where the household income should not exceed rupees 1 lakh. For the non-rural areas, it is 1,60,000. For microfinancing, the household annual income should not increase 1 lakh, while for the rural areas, it should not exceed 1,60,000. Non-rural areas, it should not exceed 1,60,000. Fine. The loan does not exceed 60,000 in the first cycle and rupees 1 lakh in the subsequent cycle. That means that in the first cycle it will be microfinance when we are giving 60,000 as a loan amount in the first cycle. Total indebtedness means the total debt with the borrower should not exceed rupees 1 lakh. The total loan should not exceed 1 lakh, because here see, there is a problem here that we do not have collaterals. Fine. The people whom we are providing this, they are not economically sound people. We are providing for income generating activities, rather we are also providing them for employment. So, we have to be very, very prudential while making these loans, and that is why RBI has given clear cut instructions. Fine. Now, education and medical expenses are excluded when we are arriving at total indebtedness. Total indebtedness means, what does this total indebtedness word mean? The total indebtedness word means the total loan or the total debt which is taken by a particular client is the total indebtedness. When I say the total indebtedness should not exceed, it means that a person who has taken a loan, it should be 1 lakh. In the last slide we have seen, it should be to not exceed 1 lakh, and in that 1 lakh the education and medical expenses, any debt which he has taken for the education and medical expenses should not be included. Fine. And the tenure of the loan should not be less than 24 months. Fine. When the loan amount exceeds rupees 15,000, with the right that the borrower prepay it without penalty. The borrower will prepay it without penalty. That means there is enough credibility of that particular borrower. There is enough credibility of that borrower. Clear? So, I will be recapping it. RBI has given a guidelines that the 85% of the assets of a microfinance institution, 85% of the assets should be qualifying asset. And what are the qualifying assets? The qualifying assets are the loans which we have seen in the last slide also, and these loans should follow the following criterias, and these criterias are that the household income In the rural areas should not exceed 1 lakh, fine. In the non-rural areas 160, then loan should not be more than 60,000 in first cycle and 1 lakh in the subsequent cycle. Total indebtedness should not be more than 1 lakh. Then comes education and medical expenses are to be excluded. Then the tenure of the loan, which is less than 24 months when loan amount is exceeding to 15,000, the right of the borrower to prepay without penalty. Then loans is to be extended without collateral. What is this? We are talking since the first day we are started with microfinance, we are talking that the loan should be without collaterals. ठीक है. What is collateral? Collateral is any guarantee which we are providing for that particular loan. So it should be without collateral. Secondly, aggregate amount of loans for income generation, ठीक है, should constitute at least 50% of the total loans of MFI. Fine. So that the 50% can be given for other purposes. Got my point? That means if an MFI is giving rupees 100 loan, है ना, 100 loan, in that case the 50% should be for the income generating activities and the 50% should be for other, that is education, medical, housing, repairs and all, for those things, so that there will be a equal distribution of lending, fine, and there will be fair chances of getting responsible returns or the interest from the borrowers, fine. The loan should be payable weekly, fortnightly or in monthly installment at the choice of the borrower. We all know that the frequency of the repayment is high in case of microfinance institution. Why? Because here the people who are borrowing, they are not having sufficient money and they are having an income on the monthly or the weekly basis. So we also have to keep in mind. Secondly, the average interest on the loan during the financial year should not exceed the average borrowing cost. Means the borrowing cost to the bank plus the margin, that should be the cap limit for charging the interest rate. What should be the cap limit for charging the interest rate? It should be the borrowing cost plus the margin. Got it? Borrowing cost plus the margin. Fine. The rate of interest may not exceed, it's not exceed, may not exceed 26%, the maximum permitted for individual between the minimum and maximum interest rate. Minimum or maximum, there should be a difference of 4%, not more than 4%. Fine. So these are the certain rules, and here now whenever we are pricing the loans, I say ki you have to price the loan. These pricing, the whenever the loans are priced, these three things are not to be included. Make it sure, it is very important. The first thing, the processing fee should not exceed 1%. Processing fee, whenever we are making any pricing of any loan or any borrowing, any loan from an MFI, the first thing is the processing fee should not exceed 1%. Second, the interest charge and the insurance premium, they should not exceed 1%, and there should not be any penalty for delayed payment. There should not be any penalty for the delayed payment. Last, which is very important, is no security deposit margin is to be taken. That is to be keep in mind. And the capital requirement, CRAR, you all have gone to risk weighted as capital to risk weighted average asset. That is 15% of its aggregate risk weighted asset, that is 15%. The ratio of asset to the capital is 15%. The capital requirement is 15% of its aggregate risk weighted asset. Why is it so? To manage the risk, because there we have to also work on the sustainability of these micro enterprises. Fine. Now coming to the two more very important new schemes which are launched by this government. The first one is Mudra, and Mudra was announced by the Union Finance Minister, late Mr. Arun Jaitley, when he was the Finance Minister in 2015-16. Mudra was formed, and it was a subsidiary of SIDBI. SIDBI, you all know, a Small Industrial Development Bank, and the SIDBI has come up with this, and it was registered as a non-deposit taking non-financial institution NBFI with the Reserve Bank of India. Okay. What is the objective of Mudra? The objective of Mudra was to refinancing the institutions, the microfinance institutions who are facing problems, refinancing the non-banking financial companies who are extending credit to the micro enterprises, who to extend credit to the manufacturing and trading services where the credit requirement is not more than 10 lakhs. Fine. So basically it was set up for the enterprises where the requirement for credit is less than 10 lakhs, and the objective for it was to serve the small borrowers, who are governed by MFIs, and offering them suitable products at affordable price so that the microfinance institution grows. ठीक, once again I will be summarizing what is Mudra. Mudra was formed by SIDBI, owned subsidiary of the SIDBI, rather wholly owned subsidiary of SIDBI, with an objective to help the microfinance institution for refinancing non-banking financial institutions to the micro enterprises, to the borrowers who want a lesser amount of loan, and it was expected that this Mudra would be helpful for the people who want a small amount as a loan and who don't afford a high cost loan. So these affordable loans were the main strength of this Mudra. Fine. And you know, one more thing, that right now a number of questions are being raised on this Mudra, and I think it would be helping the people, but still we need to revive some schemes into it. Fine. The second scheme which was launched by our Prime Minister is the Pradhan Mantri Mudra Yojana. It was also the same, and it provides loan up to 10 lakhs to the by the public and the private sector or the rural banks for what? For income generating micro enterprises, and which are engaged into manufacturing, trading and the service sectors. And there is a facility, one more facility here is that rupees 5,000 was sanctioned as a overdraft, and this Mudra has 3 types of scheme based on the micro enterprise. It's a small enterprise, then it is Shishu, then it's Kishore, and then it is Tarun. These signifies the stage of growth of the micro enterprises and the funding needs of the micro enterprises. As a small is for Shishu, and for medium it's Kishore, and for a big enterprise it's a Tarun. Fine. So these are some of these are the 2 schemes which are working under here. So in this what we have in this lecture, what we have covered is, we have covered what is how RBI has controlled what is MFIN, what is microfinance institution network, what are the different policies, what is the objective of this learning is that we would be able to know if after doing your MBA you want to be an entrepreneur, then it would be an added advantage to you, that if you want to run your micro enterprises, you may be knowing all the rules and regulation. Secondly, if you are going to do a job which deals with this microfinance institution, it will be an added advantage. So my suggestion to you all is that go through all the procedural requirement of MFIs and how they have participated in our economy. Fine. I hope this will be a learning session for you. Thank you so much.